Kita putus.
Kenapa?
Pikir sendiri.
Hi, I'm Anis.
I'm Farzana.
I'm Dina.
I'm Wafi. And I'm Reza.
This is our MAF253 group assignment presented to
Okay, so what is investment appraisal? Investment appraisal, also known as the capital budgeting, is the process of selecting and evaluating long-term investment projects. Okay, so making the right decision is very important because this project involves a large cash outflow and long-term commitments.
Okay, so for the next part, which is relevant cash flow, firstly, we will calculate the initial outlay. So for the first one is purchase price for the new machine is 2.3 million, and then add up with transportation, insurance, custom duty, and training. We will add up 25,000, 20,000, 108,000, and 30,000. And then we also will add up with the increase in inventories for 250,000. And for market survey, we will put it as nil. And then, so total up, we got the total outflow for 2,733,000. And then we will last with cash outflow for sale proceed of all machines. We will last 600,000, and then tax saving 24% time with 95,000. How do we get 95,000 is from the disposal. First, we will calculate the depreciation of all machines for 950,000 less with 100,000 divided by 10 years. We got 85,000, and then last with accumulated depreciations 85,000 times with 3 years, and we got 255,000. And then for the net book value 985,000, 955,000 less with 255,000, and we got 695,000. And then less sales proceed that we sold the old machine for 600,000, so we got less loss on disposal, 695,000 less with 600,000, we got 95,000. So tax saving is on loss on disposal, which is 24% time with 95,000. We got 22,800. So total outflow less with sale proceed of all machines and tax saving, we got initial outlay for 2,110,200.
Okay, so let's moving on to the differential cash flow. Okay, so where there will be two benefit consist of increase in revenue of 600,000 and decrease in cost of defect of 105,000, and then you will get the 705,000 and less cost of increase in operating expenses of 200,000, and the amount will be 505,000, and then less in increase in depreciation, where the working for depreciation, firstly the existing machine, where you will less 950,000 less 100,000 and divide by 10 years, and you will get 85,000. And then for the proposed machine, you will have to add up the custom duty, transportation, and insurance, amounting to 180,000, 25,000, and 20,000 respectively, and you'll get 153,000. And you have to add up with the purchase price of 2.3 million and divide by 7 years, and you will get 321,857. And lastly, for the increase in depreciation, total of increase in depreciation will get 236,857. However, for the cash flow, you will have to put as nil. And then for the net profit before tax, you will get 268,143 for profit, while for cash flow, you will have 505,000. And then less the addition of 24% would be 64,354, and the net profit after tax is 203,789. And then you will have to add back the increase in depreciation, and you will get the annual after tax differential cash flow of 440,646.
So now let us move to the terminal cash flows. It is a cash flow that occur only at the project termination. So what we got here is a salvage value of the new machine of 200,000 ringgit, and then we add out with the working capital recovered stated in the question of additional investment of inventories amounting to 250,000 ringgit. And then we total out, we got 450,000 ringgit of the terminal cash flows.
So for question C, decision making technique, the first one is net present value. We have to create a table like this which is consists of year, cost, present value rate and discounted cash flow. So for year 0, the initial outlay is 2,110,200. Since it is a initial investment, we have to multiply it with present value interest factor at 15% at year 0, which is 1, and we will get the present value 2,110,200. So for years 0 until 7, the after-tax differential cash flow is 440,646. We multiply it with present value interest factor annuity at 15% at year 7, which is 4.1604, and we will get the present value of 1,833,264. So for year 7, the terminal cash flow is 450,000. We will multiply it with PVIF at 15% year 7, which is 0.3759, and we will get the present value of 169,155. To get the net present value, we have to total up all the amount, and we will get 107,781.
Okay, now we need to calculate the present value of the internal rate of return for the company's Rumbia Sidran Berhad. So before we continue to the calculation, we need to know the negative value of NPV and the positive value of NPV. So based on this question, we identify that the negative value of NPV is at rate 15% and the positive value of NPV is at rate 10%. So for the year 0, we can see that the cost of the investment is 2,110,000 and 200. We multiply with rate 1 and we get the present value is 2,110,000 and 200. For the years 0 to year 7, we can see the initial cost is 440,646. We multiply with the rate 4.8684 and we get the present value 2,145,000 and 240. And for the year 7, we can see that the cost is 450,000. We multiply with the rate is 0.5132 and we get the present value 230,940. So we sum up all this figure and we get the net present value is 265,980. So now we need to calculate the IRR, internal rate of return. We need to take the 10% plus 265,980 divided by 265,980 plus 107,781 times with 15% minus 10%. So we get the 10% plus the 3.55 and we got the IRR rate which is 13.55%.
So what is SME? SME is an acronym to small and medium enterprises. These are businesses that are not very big and they usually classify based on their sales turnover and also the number of full-time employees. In Malaysia, the company is considered as an SME if it meets these criteria, whichever is lower. According to LHDN, SMEs can be categorized into two industries, which is manufacturing and also services. For manufacturing, the turnover sales must be below than 50 million ringgit and the full-time workers must less than 200 people, while the services, the annual sales must be below 20 million ringgit and the full-time workers must less than 75 people. And for the characteristic of SME, we have limited financial resources, small workforce, and also owner-managed operation. Most of the SME have limited financial resources, which they do not have a large capital compared to the big company. They usually operate with a small number of employees. and sometimes the owners directly involved in managing the business and decision making.
Okay, so for the summarization of the case study, which is the key issue discussed in the article, is the challenges among Malaysian SME. So the first challenge is financial constraints. Malaysian SME is limited access to finance and have difficulty obtaining bank loan due to lack of collateral, weak financial records, and high perceived risk by financial institutions. And the second challenge is human resource limitations, which is they cannot attract and retain skilled employee and can offer competitive salaries or structured training program. And the last challenge is management and entrepreneurial skills, which is weak managerial capabilities and lack of strategic planning. And the last one is many entrepreneurs lack of formal businesses knowledge.
Okay, now we move on to the solution of the problem faced by the SME. So for the first problem is financial constraint. To overcome this problem, the company need to improve financial record keeping and accounting system to manage their cash flow. Next, they need to prepare a proper financial statement to increase loan approval chances from financial institution. Next problem is human resource limitation. So the company need to build a positive and supportive work environment among the workers and collaborative with university students for internship to attract skilled workers. And the last problem is the poor management and entrepreneurial skill. The company need to adopt modern management and digital business tools to improve the efficiency. And lastly, they need to improve strategic planning and decision making to ensure long-term business growth.
So for the conclusion, overall, the article shows that Malaysian SME faces key challenges such as limited financing, lack of skilled workers, weak management, and low technology adoption. These issues affect their ability to grow and compete in the market. Therefore, better financial support, training, and government assistance are needed to strengthen SME performance.
Last but not least is the advice. So Irina, what's your advice for Rumbia Sudan Berhad?
Well, for me, I think Rumba Cyberhide should reject the proposed investment and also should not purchase the new machine as the project generates a negative MPV of RM 170,782 at a cost of capital of 15%, which reduce the shareholder wealth and also could lead to economic loss.
Furthermore, the IRR of 13.55% is below than the required rate of return, which is 15%. Bye!
Ku tuliskan kenangan tentang caraku menemukan dirimu, tentang apa yang membuatku mudah berikan hatiku padamu.
Takkan habis sejuta lagu untuk menceritakan janji, kan teramat panjang puisi untuk menyuratkan cinta ini.
Bila habis sudah cinta ini tak lagi tersisa untuk dunia, karena telah ku habiskan sisa cintaku hanya untukmu.
Boleh lagi. Asal ada stop. Boleh ambil lagi. Ni. Bagi. Ambil kayu. Tepi. Baba. Masa ikat tangan.